Let me ask you something. What if I told you a number you didn't vote for? A number you don't fully control? A number most people don't even understand? Decides whether you can buy a house, how much you pay for insurance, if you get approved for an apartment. Sometimes even whether you get hired, that number is your credit score. And in America, it quietly controls your life. This isn't conspiracy, it's math. Today, I'll show you how credit scores really work, why the system benefits lenders more than you, how small mistakes cost you thousands, and how to take back control strategically. Because once you understand the system, you stop playing defense and start playing smart. A credit score is a 3-digit number, usually between 300 and 850, but it's not just a number, it's a risk prediction algorithm. It answers one question: how likely are you to make us money without defaulting? That's it. Not, are you responsible? Are you intelligent? Are you hardworking? Just, will you repay debt consistently, profitably? There are two main scoring models. FICO, used in 90% of lending decisions. Vantage Score. And they're built using 5 main factors. 1. Payment history, 35%. 2. Credit utilization, 30% 3. Length of credit history, 15% 4. Credit mix, 10% 5. New credit inquiries, 10%. Notice something? It rewards borrowing, using credit, keeping accounts open, paying interest over time. You don't get a high score for avoiding debt. You get a high score for managing debt well. That's an important difference. Let's look at real consequences. Mortgage example. If you have an average 760 plus credit score, you get the best rates. 620 score, you might still qualify, but the difference? On a $300,000 mortgage. A person with excellent credit might pay $1,900 per month. A person with poor credit might pay $2,300 per month. That's a $400 difference. Over 30 years, that's over $140,000 extra. Same house, same income, different number. Auto loans. A 750 credit score might get 5% interest. A 580 score might get 15%. On a $25,000 car loan, that's thousands more paid for the same vehicle. Renting an apartment landlords. Check credit. Below 650, you may need larger deposit, cosigner, or outright rejection. Employment and insurance. Some employers check credit reports. Insurance companies use credit-based insurance scores. Lower credit, higher car insurance premiums. Even if you've never had an accident, think about that. Section 3. Why most Americans struggle with credit. The average American credit score is around 715, but millions sit below 650. Why? Not because they're irresponsible, but because medical debt hits unexpectedly. Student loans inflate balances. Late fees stack fast. Utilization spikes during emergencies. And here's the part nobody explains. The system punishes stress. Lose your job, miss one payment, score drops, use 70% of your credit limit during an emergency. Score drops. But when you're financially stable, you don't need credit as much. So the people who need flexibility the most get penalized the hardest. That's structural. Section 4, the psychology behind the system. Here's something deeper. Credit scoring changes behavior. Instead of asking, is this purchase wise? You start asking, will this help or hurt my score? You become optimized for a number, not financial freedom. Banks love predictable borrowers. They love long credit history, revolving balances, monthly payments, interest over time. A perfect customer isn't debt-free. A perfect customer is profitable and stable. That's uncomfortable. Section 5. How to take control. Now the important part. You can't ignore the system, but you can learn to use it strategically. Here's how. Number 1. Protect payment history. Never miss payments. Automate everything. One 30-day late payment can drop your score 80 to 100 points. Automation protects you from emotion. Number 2. Lower credit utilization. Keep usage under 30%. Under 10% is ideal. If your limit is $5,000, don't let balance exceed $1,500, even if you pay in full. Number 3. Don't close. Old accounts lightly length of history matters. Old accounts equals scoring stability. Number 4. Avoid too many hard inquiries. Each hard pull drops points temporarily. Be intentional. Number 5. Build credit on purpose. If starting from scratch, secured credit card credit builder loans. Become authorized user strategic credit beats emotional credit. The real truth. Here's the deeper truth. A high credit score doesn't make you wealthy. It makes you borrow cheaply. Wealth comes from assets, income growth, investing. Ownership credit is leverage, not freedom. Use it. Don't worship it. You are not your score. But in America, you must understand it because ignoring it is expensive. If this made credit feel clearer, subscribe to Money Explained Simple. No hype, no shame. Just how money actually works in America. Because when you understand the system, you stop blaming yourself and start winning. Your future self will thank you.